sales volumes as a lead indicator. When investing in property, why is sales volume so important? Now, for some, you may not realize how important it is, and it's going to be a huge game changer when you see the power of it. Sales volumes and rising sales volume activity is simply more buyers and sellers come into the picture together to transact in a market. And sales volumes have been, I'd say, one of the strongest correlations with property declines or price growth as a lead indicator, not a lag indicator. And people too often look at median value changes, which is one of the indicators, but that can be very easily distorted. Whereas with sales volumes, it's such an important indicator that I'm going to go through now on how it can impact and show you potential growth cycles. So with sales volumes, there are going to be markets and moments in those markets where it's almost worthless to look at. And I'll show you an example where it's worthless to look at. Firstly, Sydney right now is going through a pretty fast recovery. And with Sydney's recovery, sales volumes aren't anything special though. And when that recovery is occurring, it's because the demand is high, listings are low, and if listings are low, usually sales volumes will also be low. And so that pent-up demand is really attacking these low listing volumes and recovering prices. Now then one would say, well, look at that, Arjun, there's low sales volumes and growth is occurring. Remove the word growth and call it recovery, because growth is occurring to those who bought in the last 2 years. Otherwise, for everyone else, it's recovery that's occurring. And when recovery occurs, usually sales volumes are lower. And the reason why they're lower than their last boom is because a lot of people still aren't listing properties because they have not recovered. And because interest rates are low in today's world, why would someone who's lost dollars in equity want to get rid of their property if they can hold it and are seeing signs of it growing? So from that aspect, even though sales volumes are low because listings are low, because we're in recovery, not growth, growth will occur as a result of less stock. So now it's growing, it's growing, it's growing. When you start to get beyond peak point or previous high, that's when markets now are having incentives for lots of vendors who bought before peak. And in that time, they're now able to gain money if they were looking to sell, assuming it moves beyond the previous peak for when this recovery is occurring. So why does sales volume come into the picture now? So now if we're moving past a previous peak, there is more incentive for those people who wanted to sell to feel comfortable with selling because they aren't losing money and because they were able to hold it in lower interest rate environments. They can either continue to hold and see where this growth goes, or they can go, you know what, I think now would be a good time for us to downsize, upsize. Some people do it during those recovery periods, which is also a smart thing to do. But the majority will not want to take a hit and they'll go, well, now I want to start looking at maybe selling my property because I'm not going to lose so much. And so as soon as people start selling their property now, what does that equal? Listings go up. Now, if that demand that was there to bring up the recovery is that strong, well, it should be able to still keep buying those listings that are increasing, which will now mean buyers and sellers are coming to the party and sales volumes will start to increase again. And if they start getting back to previous boom or somewhat higher than the norm line, if you take away outliers, then you might start to see price growth continue to intensify because the simple activity, the whole reason where sales occur, buyers and sellers are coming together to transact more and more and more, which would say that there's more conversations at barbecues, lunch breaks, before work, after work, whatever, saying that I just bought here because there's more sales volumes occurring. Or I just sold my house here, I got a deal, it sold in 2 weeks because there's more sales volumes occurring. And with days on market declining. So when you start to see that indicator occurring, it's usually a sign that you're amongst a growth cycle or starting a growth cycle, because sales volumes is a leading indicator. As when sales volumes pent up, demand has that pressure and sales volumes increase, then all of a sudden people will start to talk. And then when people start to talk, you could be in that patch of the lagging group, or you could be a part of where the later group come on and start buying, but the majority have started to dip, and as they've started to dip, sales volumes are coming down, but you're that late group that's coming to the party and still increasing prices because all your friends invested there, or family, or you're looking to move there. And that's where price growth still occurs at that tail end for a little bit longer, but sales volumes have dropped, and it usually means the price growth will follow its slowdown eventually, but there's always that lag, and so that's where sales volumes can be a leading indicator. So those are the examples where sales volumes will not show strengths, but growth is still occurring because of lower supply and market. But eventually it always reaches a point where now more vendors are comfortable to list, and it usually occurs once recovery has happened. And now that's where the demand will really be tested to see if it's recovery happening or if it's a new growth cycle going beyond recovery and continuing. So I hope that helps you, and sales volumes is a great way to identify and look at it. But at the same time, it's not the only indicator to look at, but it is a very important leading indicator. And when you're looking to invest, when you consider sales volumes, it can be a very, very important piece to the puzzle as you try and find growth where it's occurring in different parts of the country.